Hello, everyone, and welcome to the IX Trading Room with me, Richard Perry, Market Analyst for INFINOX. Now, just to say we are live on YouTube at the moment. Also, I've been having a couple of internet issues today, so hopefully that's not going to affect the presentation too much. In fact, hopefully it's not going to affect it at all, but it might do. So just warning you before we get going. Anyway, so right, let's say what I'm going to talk about today. I've got half an hour, so as ever, I'm going to talk through some major markets, talk through where I see markets moving and what's going on, some of the important factors that we need to consider when looking at trading markets. I'm going to be using the MT4, MT5 platform. This is my version is the MT5 platform. It is very, very similar to MT4, pretty much exactly the same, just a couple of little functionality differences, but it's essentially the same platform. And through the sort of my talk and analysis, and I'll be sort of looking at how to use that platform, and it'll be sort of the two together, so it'll be hopefully quite helpful for you. Right, so straight into it with why not start with euro dollar. So basically, okay, starting off with currencies, what we've seen in the last few days actually is, if I get my board up, is that currencies have turned a little bit more dollar positive. What we've seen is the dollar index has rebounded slightly, not too much, but slightly off its lows in the last few sessions. And well, that's sort of come as treasury yields have started to pick up again. And well, I say pick up, I mean, certainly looking at the 10-year, it's sort of hovering really. The 2-year has picked up a little bit more than the 10-year. But again, the question is this a turning point moment? What we've seen in the last few days is that the US data has started to be more positive. We had non-farm payrolls being above expectations, along with average hourly earnings as well, better than expected. Morning, Lazzy, thanks for coming. And also, we've seen ISM services data, ISM non-manufacturing, whichever way you want to call it, also better than expected. Now, following on from those two data points, we've seen the dollar rebounding, and that has been seen across major forex. You see euro dollar lower, sterling dollar lower this morning, dollar yen higher. Now, dollar yen is the big one. Dollar yen is the big mover, in my opinion, at the moment. What we can see is that the yen has actually been one of the best performing currencies of the last month. Show you here. So I should sort out my labels on this, but I haven't. Right, dollar yen is this pink one here, the pink one at the top. You can see the pink one here, dollar yen, this line here, has been the best performing major currency of the last month. However, you can see in the last couple of days, it's actually fallen more than most. It's basically because dollar yen is very much tied towards how bond yields move. Bond yields, if bond yields pick up, dollar yen really does move higher. Bond yields fall over, dollar yen really does also fall over. So it's very much tightly closed, tightly knit towards how bond yields on dollar yen. Show you dollar yen. We can see that this big rebound in dollar yen has come as the dollar has strengthened, and it's back into a key resistance. But this is a big theme across major forex at the moment, is that you've had this strong dollar correction. There's been a rebound, but how big is that rebound going to be? Is it just a rebound on the dollar that hits resistance and then falls over again? You can see this on dollar yen here. Big resistance overhead of all these old key lows. This is basically a big pivot band here, got in on this chart, on this MT5 chart here. Big purple pivot area. Now you can draw draw resistance bands. I like to have rectangles. It's very simple. Doesn't really affect the chart too much, but it's a nice graphical illustration of what is going on the chart. And I draw little areas of resistance here. And you can see also the downtrend, drawing in the downtrend. You draw the downtrend in this function here, and draw it there with the line. So I've drawn in that downtrend. Let's just extend it slightly. And basically that, the resistance band and also the 21-day moving average, the falling 21-day moving average, all a basis of resistance overhead. And if I get the crosshair, we can see that comes in around 37.50 up towards 39.50 area. So 200 pips worth of big resistance on a near to medium term basis. This near term technical rally into this resistance area. So the question is, how does the market react around that? Is basically setting up, I think, for non-farm payroll, sorry, the Federal Reserve next week. As the Federal Reserve meeting has come into play, I think markets have reacted to this US data and thinking maybe the Federal Reserve is not going to be as hawkish as maybe it could have been next week. That is the question for Forex markets. Similarly, we've seen this breakout on euro dollar. Go back one more level. See this big breakout above the resistance at 103.50. That old resistance becomes new support. We've sort of been busy sort of moving through this resistance in the last few weeks. And just recently, we moved above 104.95, breaking out on Friday. But the market has pulled back slightly since then. So the market has pulled back into a band of breakout support. And again, how does that affect the dollar? Is this just a near-term dollar rebound that's pulling euro dollar lower? Is it something bigger? Now, I think the key question we're going to find that answers that is that US CPI data next week. How US CPI data next week comes out is going to be crucial. I think if you've got a non-farm payrolls that comes in better than expected, you've got the ISM services that came in are better than expected with better employment component as well, and also the US CPI, which is on Tuesday. If that comes out better than expected, we could see the dollar rebounding because of the hawkish implications for the Federal Reserve on Wednesday. And that would drag euro dollar lower, and we'd see euro dollar moving below 102.90, maybe even back underneath 102, that 102.20 breakout level. So it's a near-term move that is just being contained for now. I mean, we've had 3 negative candles in a row there. We've had 3 negative candles in a row there. And we've now got 3 negative candles in a row. Again, does the market now start to settle is the question. So it really is on a bit of a knife edge, this dollar move at the moment. Is it just a near-term move, or is it something bigger? We don't know the answer to that yet. We don't know the answer to that yet. I think, say for example, if put it on the 4-hour chart, if it goes below this reaction low here, which was the non-farm payrolls spike low before, I mean, the non-farm payrolls report was strong, initial dollar strength, but then the dollar sold off. It's just the fact that we've had the ISM data on Monday, which was this candle here, strengthening the dollar, and the market has just been since, with those 2 big data points, has since questioned that maybe the dollar might find some strength after all. So we are looking out for this, and it's pretty much on the level here. So euro dollar moving below that. So basically, if euro dollar moves below, I mean, I've said about payrolls. I think if euro dollar moves below payrolls Friday low, then that would probably be an indication that the market is sort of turning lower a bit. Here we see on the hourly chart, let's move out one more level. You see the hourly chart there, you could argue there's a top pattern in play there, and it might turn corrective. So I would say there is a possibility for a trade there. I think it's because the market is so at risk of sort of moving lower on this US CPI data, but it depends on that CPI on Tuesday, which is still a few sessions away. It's a difficult one, because if the CPI does sort of, again, have for its 2nd month in a row, if it falls, then we're going to see a big dollar correction again, and euro dollar will be spiking higher. The Federal Reserve is likely to then sort of certainly pull back onto the 50 basis points rate hikes. And yeah, it's that cut and dry. It's sort of one way or the other. So it's a difficult one at the moment to sort of put your neck out and trade. But there is, as I said, that support of non-farm payrolls low comes in at crosshair on it 104.30, 104.28. So if 104.28 gets broken, could open a deeper correction. But again, it might just be a near-term move. So just it depends on your trading time horizons, how that gets played, I think. And it's similar throughout these forex majors. You can see here sterling dollar pulled lower back towards this uptrend. Again, the uptrend is being tested. That RSI back to levels where previously the buyers have come in. So again, is this a moment where the dollar correction gets deeper? See, on a technical basis, if it was purely on technicals and you were living in a darkened room looking at your charts and had nothing else, you'd say, well, that's a pullback into support. And you start to think about that being a buying opportunity. So that's the problem, the fact that we have seen this pullback. Previously, the support has come in after a few sessions of pullback and then gone higher again. But that's why we just need to see that support decisively holding. And it's just on that level at the moment. And again, once more, Aussie dollar, you've seen in the last few weeks, a few sessions of negative candles before support comes in. Negative candles, support comes in. Negative candles, back towards this 21-day moving average, back towards 50 on that RSI, the relative strength index. All these things look to be near term of this correction. And admittedly, on the Aussie, we've had the Reserve Bank of Australia hiking rates yesterday. It found a bit of support. And again, the support has come in to an extent this morning. So yeah, it's sort of interestingly poised. These markets are all, certainly on Forex, very finely poised. And it's, I wouldn't personally, I mean, I'd want to see support decisively coming in on euro dollar, sterling dollar, Aussie dollar before going. And I mean, you could argue, for example, Aussie dollar. Aussie's a little bit of an underperformer. There is a possibility of playing for the downside break. And I think what you can do, or what I would think about doing in this scenario, is bearing in mind Aussie started to find support, that there is a possibility, and it's probably the one I'd choose actually, is for Aussie dollar to have a pending order sitting below. So you'd have a sell stop order, on Aussie dollar. Most important thing about trading on the platform is the trade size, the volume size. On Forex, 0.1 lots is basically around about $1 per pip. So bear that in mind. So if you do one lot, that's $10 per pip. That is a big trade. That's a big trade, especially if you've got a trading account of say $1,000. It's a big trade. $10 per pip. So I'd be looking at trading probably. Let's see how this works out. I'd be sticking the sell stop. So the pending order, sticking that below 66.41. So 66.35. So underneath that reaction low that we saw last week of a sell stop order. So and looking for a retreat. Let's see what we can get in terms of, I mean, if we did a 0.1 lot trade, or a mini lot trade, and running $1,000 account, you can have for 5% of your trading account, that's a $50 stop loss, which is a 50 pip stop loss. So we can do that. So 50 pips above 66.35 is 60.6685. 6685, which on the 4-hour chart, let's see on Aussie. So the trade would be underneath that, so 66.35 around about there, 66.85. I mean, it's back above. I mean, if you've got the breakdown, it'd be, yeah, and that's certainly possible. So that's a reasonable trade, I think. But ideally, you probably want it above that. So 67. What's that? 67.44. To be honest, what I'd do is I'd half that, so 0.05, so half a lot. I'd have 100 pip stop, 67.40. What was that? That reaction high here, 67.43. Yeah, I'd say okay, 67.50. So that's 115 pips. So you'd need, if you're doing a stop that size, 115 pips, you'd need to have a target of around about 230, 250 pips. Now 250 pips from 66.35 is 64 figure. Where does 64 figure bring you out? Well, you're on the daily chart, you're down. Wow, you're sort of in the realms of here. That's 64.50. Yeah, it's doable. It's doable. It's a sizable move. It's a sizable move. I mean, this is the consideration that I'd be taking if I'm putting on a short position here. First of all, what you're doing is you're trading against the trend. Trading against the trend, is that a good idea? Well, playing for a corrective move against the trend is, bearing in mind that the market has been rising for the last sort of 6-8 weeks. Trading against the trend comes with a risk for a start. I prefer to buy into weakness. So that is the one consideration there you've got on trading short on that Aussie side. That is a big move to the downside. You could in this instance, bearing in mind that it is sort of a speculative sort of corrective move, you could have a smaller stop at 67.20 above this current reaction high that we've had today, 67.20, 720, which is 85 pips. So that's 170 pips of downside from 66.35. That's sort of 65, 64. Yeah, it's still it's still quite big. Still quite big. I mean, you're looking at the high 65s. Maybe you can have maybe there would be a correction back to, okay, 65.50. Okay, we can do that. 65.50. So let's see that. Good to close. Okay, so we've got sell stop, half a mini lot. Yeah, let's go for that. Okay. Put that in. Okay, you've got, right, so yeah, you've got the trade levels that come in here. Again, that's not even that. Is my maths right on that? I've got a 60, 65.35, 67.20. That is 85 pips, and you've got 65.50. Yeah, it isn't. You've got the low 65. Sorry, you need to have that as the low 65s, and yeah, you could see that. So let's adjust that take profit target to 65 figure. Modify that. Okay, that's more reasonable as a trade. You can see here the trade levels have come in, so we could do that. So yeah, I'll stick that in and see what happens. If it doesn't fall to that, I'm not in the trade anyway. So, and if it does fall below that support, it's probably going to be with a big decisive dollar move. So I'm relatively happy with that. So let's quickly move on to commodities. We've had a sharp correction move on. Look at that big bearish engulfing candle on the gold price, and you can see also that move on the silver as well. Silver and gold both with big bearish engulfing candles. You've seen a little bit of support coming in, and that's encouraging us to an extent for this move. You've seen the support also coming in with the RSI ticking back higher again in the high 50s. So that bearish engulfing candle hasn't really taken hold yet, and the support has come in. So relatively encouraging for the precious metals. You can see that both on silver and gold. And both silver and gold, I still think are buys into weakness. You've got this run of higher lows. That's silver. Let's get back on this run of higher lows you've got on silver. And I'd be looking at this silver correction and thinking, well, anything back towards sort of this 21-day moving average, which is becoming a basis of support, which is around the 2170 mark. You've got this pull back to the breakout area as well. So this is decent support territory for the silver chart, and the fact that support came in yesterday and it has held overnight is encouraging. And it's similar sort of move on gold as well. Again, higher lows coming in on gold. You've moved back to 1764, which was a previous little mini breakout, but 1764 basis of support around there. Also an old high around there, interestingly enough, as well. But you've got the RSI coming back to the mid 50s, finding support. So the correction on commodities hasn't yet taken hold. That hasn't yet taken hold, and I still like commodities. So you'd say that commodities holding ground essentially is sort of positive for all of these sort of trades going higher. Euro dollar, cable going higher, even the Aussie dollar going higher. You know, I put that Aussie dollar sell stop order in on the Aussie on the potential for this to break down. Well, again, at the moment, it's still forming higher lows, but if it breaks below that reaction low that we've seen at 66.40, then it breaks that run of higher lows. So it's sort of a bit of a doomsday scenario trade, that, but speculative in terms of but it doesn't get filled if the market continues to go higher. So it's sort of a bit of a safety buffer there. But yeah, for now, these commodities are still moving higher, certainly on the precious metals, still finding support at higher levels. So you're still encouraged by this. Now, the interesting one is the fact that the oil price has broken down. Oil breaking down in recent days. It's a key technical breakdown. I don't know whether the fundamentals are looking that bad. I mean, OPEC's sort of decided to keep their production levels basically flat. China is sort of looking at easing its COVID restrictions. So the fact that oil is breaking down, I think, is an odd one. It's interesting. I mean, OPEC keeping production restrictions in place, and also China looking to ease restrictions. So there's a relatively supportive supply element there, but also arguably a supportive demand element. But oil is broken down. But you look on the technicals, 30 on that RSI. 30 on that RSI is a point at which we do start to see the support coming in on oil quite often, and then it rebounds. So yeah, the fact that it's broken down, I wouldn't say that sort of opens the floodgates necessarily. I mean, obviously we've seen these moves sort of breaking down previously and then quite a sizable recovery. So it could well be that we see another technical rally from that 30 oversold area, and then it starts to fall over again. So oil is not one I'd be necessarily chasing lower, although it does look as though it is again sort of moving lower. But I wouldn't be sort of chasing it lower from here, basically, is with the RSI at 30, sort of the way I'd be looking at it. So yeah, I'm just holding off from that. I think a technical rally back into resistance might well be seen, is all I'm saying on oil. Equity markets. Wall Street is breaking down. Now, this is interesting. Let me just show you on that's oil, natural gas, NASDAQ. What's leading this move lower? Looks like it's the Dow. Dow has been falling decisively in recent days, breaking that uptrend. That is a concern. NASDAQ has also been falling, but it's back into support for now. So yeah, you've got these key levels. NASDAQ support, that key level of support that comes in at 16,460 area. What? Sorry. 11,460. I don't know where I got that number from. 11,460 on Nasdaq 100 futures. S&P futures, look at that. Look at that breakout level of support that comes in around 39.30 area, 39.25, 39.30. Breakout support, really important now. So that is a key low. If you see that moving below this reaction low here, which was 39.12, if it breaks below 39.12 on a closing basis, that really does suggest Wall Street moving lower. And you can see here on the RSI back around that 50 mark. If you see that RSI into certainly the low 40s, that is again breakdown territory. So it's a really important moment, having broken that uptrend, and also with Nasdaq back to that level of support there at 11,460. Again, Nasdaq below 11,460 breakdown. You've already seen on the Dow futures starting to break. I mean, again, it's certainly broken the recovery trend. It's now below the 21-day moving average. So the Dow, which had been sort of dragging Wall Street higher, the Dow is sort of turning over. You can see that RSI, look at that. It's topped out. If that goes below 50, really is turning corrective. And you'd argue that's that reaction low there with the breakout, the reaction low that we had here, the support, which was this candle here, which is 33,190 area. That's a big support. If that gets broken, it really does start to turn corrective. So this equity market rally that we've seen in the last few weeks is now being seriously questioned. Seriously questioned, certainly on Wall Street. Looking at how it's looking on European markets, similar really, certainly on the DAX, uptrend broken. RSI, which had been, I've been talking on my my daily report, the Espresso Morning Call, I've been talking about the negative divergence on this RSI, negative divergence with the highs. It was posting higher highs, or a higher high, with the RSI posting a lower high, and it's now broken down as a failure swing, and that is a sell signal on the DAX, effectively on the RSI. Excuse me, a corrective signal. You could easily see the DAX pulling back now, back towards this breakout area, and I've still got this purple area breakout support. I think that's breakout, that's correction, where you see the DAX coming back into is this sort of breakout area potentially, if it does start to move into a corrective outlook on a near-term basis, and that starts to come in around the 14,000 area. So 14,000. If you see a 13 handle, that's sort of back into where the breakout area of support is, 13,600 sort of to 14,000 area-ish of support. Yeah, but I'm going to finish with a less negative, although the FTSE is now consolidating and broken that uptrend. Negative candles, several negative candles. It's not yet broken down, but it has broken. I mean, look at the number of positive candles we've had on the way up. You're now getting a load of negative candles. So FTSE 100, having rallied back to this massive resistance area, just shied away from that resistance, is starting to, it hasn't yet turned over like all the Wall Street markets are, but it is starting to drag lower, and you'd say that if Wall Street turns lower, it will move lower. Now on FTSE 100, you can see this very obvious line of support here, these two reaction lows in the last couple of days, 75.15 area. That reaction low was 75.20. We've got the breakout at 75.13. So you can see that if it, all these old highs become supportive. So if you see a breakdown below 75.10, for example, on a closing basis, that really does turn FTSE into a corrective move, completes that little top pattern and turns corrective. So yeah, there you go. That's that's the major markets that we're looking at. So yeah, I hope that you found that interesting today, and it's good to have you with us. And yeah, in terms of the data points this week, next real data point to watch out for is the Michigan sentiment on Friday, and then that US CPI data on Tuesday. Those are the big ones to come up. So I wish you good luck in your trading today, and I will speak to you soon. Thank you very much for coming, and I wish you good luck. Thank you.